American Payment Solutions. We're going to be talking about merchant statements, and it's always a mystery to me. Our merchant statements over here as a small business, there are fees that we get charged, and you always wonder where all those fees are coming from. Sometimes they're larger fees, sometimes they're smaller fees. So I'm excited today to learn a little bit more myself about merchant statements. And just to get started here, there's a couple housekeeping notes. If you can, just pay attention to your webinar pane for a moment. There is a couple icons on your webinar pane. There's a question mark and there's a hand. If you should have any questions during the presentation, we encourage you just to click on that question mark button and a dialog box will open up where you can key in your question, and we will reserve announcing those questions until the end of the presentation after Bryce is finished. And we just thank you so much for spending this hour with us. We know your time is hard to come by, and we just appreciate you spending it with us. So with all that said, I'm going to go ahead and let Bryce get started. Thank you so much, Bryce.
Awesome. Thanks, Adrian. Hello, everybody. My name is Bryce Deeney. I am the ERP Solutions Manager at American Payment Solutions, and today we're going to be covering a brief overview of all the different pricing platforms that merchant processors are putting everybody on. Now, there's a lot of people on this webinar, and truth is, a lot of you probably share a few different processors, but there's going to be some people on this call that are with processors that nobody else is on, and that's because there's hundreds of us out there. So we're going to be covering a brief overview, but some of these points may not be applicable to you individually, but we'll be happy to adjust those after the call. So with that said, I'm going to go ahead and get started. So here's a brief agenda of what we're going to cover. I am going to keep this to 30 minutes just to be cognizant of everybody's time, and I know that it's December and we're all getting into the holiday spirit, and so thank you very much for carving out 30 minutes for our team. So we're going to be covering merchant account history, who's actually doing the processing here, the different fee structures, the different types of how you can be processed and how you can actually have your fees pulled out of your account. We're going to cover PCI compliance briefly. We're also going to cover who's getting paid on what, literally diving into the line items to help make sure you understand what part of your bill is going to what different companies. We're also going to cover interchange fees, make sure everybody has a good understanding of the hard costs associated with processing a transaction. We're going to cover some typical junk fees, but like I said, there are a lot of junk fees out there that we might not cover on this call. I'm going to briefly talk about our company as well, and then talk about taking the challenge with our company at the end. So, small brief overview on our company from an analysis point of view. We've been in business for over 10 years, and we look at well over 1,000 different statements each year. So we definitely are industry experts. We're a decent-sized shop based out of Arizona, and we have more than 100 years combined experience. And we also have over 3,000 users that are currently processing with APS as well. And last but note there, we're registered ISO, which you'll understand what ISO is at the end of this call. That's pretty important to you for the United States and Canada as well. So small brief history. Merchant processors, or ISOs, did not exist back in the day. And when I say back in the day, I mean like 70s and early 80s. All merchant accounts were actually set up by the large banks, meaning Citibank, B of A, Chase, etc. They actually sold it directly to companies, and they failed in a sense because they only got the large corporations or the Fortune 500s of America to sign up, meaning like Sears. Banks found that this really wasn't in their skill set to sell and service merchant accounts, so they created a brand new industry called ISOs, or Independent Sales Organizations. So all processors out there, whether that's Intuit, Square, us, Sage Payment Solutions, any of these processors, we're registered ISOs. So, and you'll have a very good understanding of what that means when it comes to the fees that the ISOs collect versus the card brands. And the last footnote on this slide, talking about what we're responsible for. So every ISO is different, meaning there are some smaller ISOs that only sell the contract and then they sell it to a big shop on the back end that you may not even know about. but most of us are in charge of actually selling the service to you as a merchant, providing technical support, whether that's a point of sale, a physical terminal, virtual terminal, online shopping cart connection, or a majority of you probably do process through some accounting package or ERP system as well. We process the transaction for you as well. We also bear the risk on chargebacks. So if you go out of business and you had future deliveries or future sales that were never actually delivered on, we as the processor fit that bill. So that's why some accounts cost more money, or you have to pay more money if you're in a higher risk industry. We also set the price for that service as well. So like I said, some smaller shops do farm some of this out to larger processors like ourselves. But it's definitely good to know what services do your processor provide and which are you having to call third-party companies for. Okay, so there's three main different ways that you can be priced. And again, I'm covering the gamut in a 30-minute webinar, so you may not fall in this category, but I'm sure probably 99% of you do. One is called a flat rate. Many of you are familiar with this. If you've seen Square, maybe PayPal, you're paying a 3%, a 2.5% flat fee, that's it. These never existed before. It's really designed for micro merchants. So if you're the lawn guy, if you just open up a brand new coffee stand and you're selling $5 coffees and you only have maybe 100 transactions a month, this is a really good pricing platform for smaller companies. These next two are the plans that the majority of you on this call are on. The first is tiered pricing, which means you have a fully qualified, mid-qualified, non-qualified rates. There's some other fees on there as well, but this is what majority of you, if you've been in business for longer than 10 years, you probably were on tiered or you're still on tiered. And then thirdly, Interchange Plus. This has been around for a while, but it's really becoming the most popular from a merchant perspective. If you're a controller or a CFO and you're wanting to break down your bill and truly understand what profit margin your processor is making processing your transactions, Interchange Plus is definitely the most transparent way to price, and I'll explain that further in detail. But I want to dive into these a little bit more in detail just to make sure we're all on the same page. So flat rate, like I said, these are typically offered by the aggregators of our industry, meaning like Square or PayPal. What that means, an aggregate merchant account, means that you actually don't have a merchant account. Square holds one large merchant account that all of the millions of micro merchants out there that use Square or PayPal services are actually sharing the same account. So they don't have to pay all of those little fees that come with a traditional merchant account like a 3-tier or an Interchange Plus. And the reason why flat rate is good for tiny merchants is because those little tiny fees add up when you only process a few $100s a month. Or maybe you're cyclical and you're only open for business 3 months of the year. This is good because you're not getting hit with those other fees every month. Now typically, and I do have some examples on here so you can see, 2.75% for a swipe, 3.5% plus 15 cents for a keyed-in transaction. So if you're an ERP end user, right, you're a manufacturer, wholesaler, distributor, you do a lot of B2B, if you had a secondary merchant account with Square, they're going to charge you $35.15 for a $1,000 keyed-in transaction. When I show you the other two platforms, it's going to be very easy to see why this is not a good deal if you're a large, mid to large size company. There's a few other footnotes there. There is a monthly cost to these accounts. The next one, merchant fees deducted daily. This is a really, really big deal to your CPA. So most merchant accounts, so most of you probably have your fees deducted at the end of the month, but some of you may actually be on daily discount. What that means is you have $1,000 in sales, there's $40 in fees, you're only going to get a $960 deposit into your account. They pull the fees out on a daily basis. This is not conducive to reconciling your accounts, to making sure the money adds up, and making sure your processor is being honest with the fees. We don't put anybody on daily discount unless they are adamant that they want it. Maybe they're short on cash or their cash flow position is not strong. We can put somebody on daily discount if they prefer, but you will see that that is not the best way to do business. Also, no individual merchant account, like I said, they're all aggregate. And there's no underwriting being done on flat rate or aggregate accounts. And this sounds nice from a paperwork point of view, meaning when you sign up for Square, you just type in your information and you're ready to go. The bad part about that, though, is Square didn't actually do any underwriting on your business when you sign up for a merchant account, and they're putting you under the same umbrella as everybody else who uses Square. And we all know that there's some fraudulent businesses within the borders of the United States, and they can't get traditional merchant accounts, so where do they go? They go to an aggregator. So all the chargebacks coming through on that massive account, you're held to the same risk level as that person selling something that they probably shouldn't be doing, or something that's illegal or just very high risk. Also, there's limited chargeback assistance. You hardly ever win. If any of you have a personal PayPal account and maybe you've purchased something on eBay or Amazon and you've used PayPal to pay for it, you've probably witnessed this before, to where the goods weren't quite what you wanted. You issue a chargeback. The merchant never wins in that environment. It rarely ever wins. So it's definitely not in your best interest to be part of an aggregate account if you're processing a decent amount of volume. So tiered pricing. So the screenshot on the right, if you see qual, mqual, nqual, or now as fully qualified or discount, mid-qualified, non-qualified, if you see these line items on your bill, that means you're on a tiered platform. And here's some pretty typical rates that ISOs will charge a merchant on a tiered platform. So if you're a keyed-in type of company, which majority of the people on this call are, you're paying anywhere from 2% to 3.5% or more per transaction, and it's just falling into these three different tiers or buckets. So the interchange rates, which you're going to see a pretty comprehensive display of that here in a minute, the interchange rates and assessment fees, the hard cost on each transaction, is going to cost the processor less than what they're putting you per bucket. So you run a regulated debit card, the interchange rate is 0.05% when you take that card. If your fully qualified rate for a keyed-in transaction is 2.1%, that means your processor is literally making just over 2% in profit margin to process that transaction for you. So there are some benefits to being tiered, and mainly the monthly minimums are not charged on tiered accounts. So it's a better platform than flat rate. If you're processing a few thousand transactions per month pretty consistently, this is a really good platform for you. But going back to the profit margin on these accounts are typically very high, and that's great for the ISO, that's great for the processor. But from a merchant perspective, you are overpaying typically if you're on a tiered platform. And with that said, it's very hard for you to actually distinguish whether you're getting a good deal or not. The reason why I say that is because your processor actually dictates the 2.1% that you see right here. They dictate which interchange rates, which cards are going to fall in this bucket, which cards are going to fall in this bucket, and this bucket. So if they don't feel like they're making enough money on your account, they can actually move more of the cards that would have been fully qualified into the mid or even the non-qualified, so their profit margin is higher. And it's impossible for you to know that, because on your merchant statement, you're not actually going to have detailed interchange rates, meaning the cards you accepted throughout the month. They're not going to tell you exactly what type of cards you accepted. You're just going to see a few line items here with your surcharges. So thirdly, interchange plus. This also can be called a wholesale, cost plus, interchange plus. They all relatively mean the same thing. And most of you are probably already on this platform. If you're not, I highly recommend looking into it, getting analysis done. It's the most transparent way to be priced. So what that means is you're paying the true hard cost or interchange and assessment fees plus the processor's markup. So the chart on the right this is a screenshot of just a few of the interchange rates that Visa charges. And just so everybody knows, interchange rates are public knowledge. You can actually Google and find the published Visa and MasterCard interchange rates online. So you can see this was effective April 18th. Every April and October, Visa and MasterCard come out with their new interchange rates. So if you're priced on Interchange Plus at, let's say, 0.2% as an example, when you take a CPS Rewards 1 card, which is just a standard issued credit card with rewards attached to it, the hard cost is 1.65% plus 10 cents. And then you pay the ISO's profit margin. So as you can see, much more transparent, but there's also a lot of pricing benefits to you as a merchant when you're priced this way. The interchange rates, there's over 1,000 different interchange rates out there, meaning hard cost depending on what type of card it is and whether you're swiping or keying it in. If you're using a level 3 gateway, which anybody here who's on an ERP system, you really should be processing with somebody who has access to level 3 data. And what that means is it's specifically for business-to-business transactions. So if you're using an ERP and you have a lot of wholesale or purchasing cards coming in, meaning you're selling goods to other companies or services to other companies, the highest interchange rate that you pay is 2.45%. And actually the majority of them are closer to 1.85%. So going back to the fully mid and non-qualified rates, wouldn't you rather much pay 1.85% plus 0.2%, so 2.05% all in, versus a non-qualified rate of 3.5%? That's really the power of Interchange Plus when you're with a processor who's providing you a fully integrated solution with true interchange rates. So breaking down the fees, I've been talking a lot about interchange, about assessment, about how ISOs make money. So here's a chart for all of you to truly understand what part of your bill is going to which companies. So the card issuers. So I have a Bank of America credit card. When I go to my favorite local grocery store and I swipe my credit card, the interchange fee assessed to that grocery store is actually coming from Bank of America. So if that swipe is 1.65% because it's a Rewards 1 card that I'm swiping, 1.65% that Sprouts is having to pay is actually going to Bank of America. Also, I'm processing that here in the States, so this doesn't apply. But if, let's say I was from Malaysia and I bought something from Sprouts, they're also going to get hit with an international fee on a merchant statement. And this is typically about 0.5% to 0.8% depending on the card. But the international fees are also going to the card issuer, in this case, Bank of America as an example. Also, address verification fees. So you can see a large bulk of your bill is actually going to the card issuers. Now, what about the card brands? Visa, MasterCard, Discover, Amex. They make fees a few different ways on your merchant statement. So if you see network access fees, assessment fees, which all of you are going to see this regardless of who you're processing with, this is always going to show up. And it's usually about 0.11 to 0.13% for the assessment fees. There's also FANF fees or fixed acquired network fees and NABU fees. So the card brands, this part of your bill is actually relatively small. So even if you processed $1 million, maybe $1,000 of your bill, or maybe $2,000, is actually going to go to the card brands, where $20,000, $18,000, $10,000 of it is going to go to the card issuers. And reason why, I mean, we all see that Visa and MasterCard, they spend billions of dollars a year on advertising, so obviously they're making a lot of money, and they're just taking a small portion from every merchant worldwide. And that's why they can have lower fees than the actual card issuer. So every time I swipe my card, B of A gets a lot of money, Visa gets a small amount of money. And this is flat, this is standard. You as a merchant cannot negotiate these two parts of your bill. What you can negotiate is what the ISO charges you on top. And where does the ISO, or the processor in this case, make their money? They make their money in a lot of different ways. Some are transparent, some are not. So the sales discount, meaning what percentage are they charging you above interchange and assessment fees. So 0.1%, 1%, 0.5%, there's going to be some type of sales discount on your bill that you're going to see, and that's pure profit to the ISO. Also, they're going to charge you authorization fees, transaction fees, and batch fees. So there's a lot of ways of describing these on your bill. Every processor describes them differently, but you're going to have some type of authorization fee, and it can range anywhere from 5 cents all the way up to 40 cents. I've seen it, but typically it's in the 10 cent to 25 cent range. And some processors will charge on both authorization and capture. Some will charge on just auth or just capture. So if a processor is offering you, let's say 0.3% and 15 cents, make sure you understand, is that 15 cents on the authorization, on the capture, or on both? Because that can make a big difference. It goes from 15 cents to 45 cents sometimes if they're charging on all three here. Also, PCI compliance fees. So I know there are a number of people here on the call who are Sage end users as well. The majority of you probably are getting charged a PCI non-compliance fee and an annual PCI compliance fee. So going back to, what does an ISO provide? What services are they providing? PCI compliance, some ISOs do this in-house. Some use third-party companies like TrustWave. So many of you on this call have probably had to talk to TrustWave once a year to fill out your self-assessment questionnaire, the multiple choice questionnaire. That's all part of becoming PCI compliant as a merchant. And there's no way around it. Every merchant, whether you're a micro merchant or Walmart, you have to go through the self-assessment questionnaire. If you're processing MODO, meaning through an ERP system, online, e-commerce, card not present, your processor also has to scan your firewall or scan your IP address to make sure it can't be breached. So some processors will charge for this, some like ours don't, but this is definitely something you need to be looking out for and be cognizant of to see if there's some junk fees here that they're attacking on that maybe you shouldn't be paying. These are going to be on everybody here on the call. So you're going to have some type of support statement or gateway fee. This can range anywhere from $5 all the way up to $100 a month. Typically, companies are paying $15 to $30. That's the average. Some companies just bundle this up into one support fee. Some have it broken out into 3 to 10 line items. It really just depends on the processor. Also, going back to, I don't know what's specifically on your bill, because we would need the next 10 hours for me to explain every little miscellaneous fee that we've come across analyzing thousands of merchant statements. So monthly minimum fees, miscellaneous fees, gateway support fees. There's so many fees out there that processors will charge. One of the big ones is cost plus fees, or data security and integration fees. These can range anywhere from $1 to $1,000 depending on the merchant. And this is really where we get into the nitty-gritty with each individual company to look at your statements with you, go line by line item, and actually show you which part is hard cost that you cannot negotiate and which part is negotiable with your current processor or when you're choosing a new processor. So not to bore you all with a lot of numbers, but I do want to show you an example of an analysis that we've performed, just so you get an idea of what services we can actually provide. So this merchant processed a little over $125,000 in volume, and you can see they're on a tiered structure, meaning they have fully qualified rate at 2%. They have mid-qualified rate, which is another about %, and then they also have non-qualified rates. So they're on a tiered structure right now. You can also see that they have some transaction fees, miscellaneous fees of $35 a month that we were able to find, and a $5 statement fee. And you can see we proposed a cost plus or a wholesale or interchange plus pricing, meaning we're charging them the true interchange and assessment fees. That's not negotiated. Those are the hard costs on their account, plus our markup. And the reason why I wanted to show you this is because if you're on a tiered program, which means really anybody on Intuit, some people who use Sage, some people who use Authorize.net or PayPal or PayFlow Pro, a lot of those big processors out there, a lot of you are probably still on a tiered structure. And you can see even for a small to medium-sized merchant account, there's still a lot of savings to be had when you switch from the old school way of doing it, tiered, to pass-through. So everybody on this call understands the number one reason why somebody would switch their merchant account is based on price. And that's what I've been focusing on. There are some other factors we really need to heavily consider, though, because price is one thing, but actually servicing the account and setting it up correctly to make sure they're meeting your needs is just as important. And I made some bullet points here so everybody can just, if you want to jot this down or maybe watch the recording later and make sure you're receiving these things. And if you're not, feel free to talk to somebody on our team and we can walk you through it. But number one, it needs to be integrated. If you're doing double entry right now, you're really costing your company money. You really need to make sure all the transactions you're running are being applied to an invoice, being applied to a cash receipt, being applied to a credit memo. That way, everything already happens seamlessly for you. And I'm sure many of you are, if you're using QuickBooks or Sage, you probably already have that set up. But we do run into companies every single day that haven't set that up on their system yet. The second thing is, how quickly are you getting your batches? So industry standard is 2 days on Visa, MasterCard, and Discover. American Express sometimes can even be 3 days, where there are processors out there like ourselves who actually will process your transactions and provide you the money the next morning. So if cash flow is a big deal to you, you get a big $30,000 order through, you want to make sure you get the money and you know it's good, or you need to buy supplies to fit your customers' needs. Next day funding is a big deal. Thirdly, American Express opt-to-blue rate. So this is actually something relatively new. Some of you on this call probably were opted in to this program with your current processor. So American Express opt-blue is something relatively new. It doesn't apply to everybody, but if you do qualify, it's a much better pricing model if you're accepting American Express. So traditionally, you're paying 3%, 3.5% directly to American Express, and you have two separate merchant IDs, one with Amex and one for Visa, MasterCard, Discover. So you're getting two separate bills, two separate statements, and the money's getting deposited into your account, typically on two separate days as well. Where if your processor puts you on opt-blue, you're now getting one bill, one batch deposit, and you're getting your American Express funding faster. So if you process with somebody like us, you actually get next day funding on all the card brands, including American Express, and you're paying less for them. I already covered level 3 a little bit, but it's a really big deal. So a 2.65% interchange rate on a business purchasing card or a Visa purchasing card goes down to 1.85%. So it's a difference of almost a full percent on a purchasing card that you're paying. And just to be clear, we're talking about the interchange rate. So for us processors to offer you a level 3 integration or a level 3 gateway to process and save money, it doesn't cost us ISOs any money to do that, just the development work and the support behind it. But the actual interchange rate is what we're lowering. So the amount of money the card issuer is making, we took about 0.8% off of the amount of profit that, in my case, B of A would have made on the transaction when I spent my money. So make sure your processor is offering you this. If you're a wholesaler, distributor, you're running SAP, Sage, QuickBooks, Microsoft Dynamics GP, Nav, make sure your processor is offering you a level 3 solution. It's going to save you the most money. In fact, we've seen companies save over $100,000 a year if you're a mid to large size company who has a lot of B2B transactions. So definitely something to look into. And these last four are pretty obvious, but I wouldn't want to do this presentation without mentioning them. Make sure your processor, your ISO is trusted. Check their BVB rating, check third-party reviews, ask for references, or make sure that you've talked to somebody or they were handed to you by a trusted person that you know. There's a lot of people that in our industry, just because it can be extremely profitable, there's a lot of ways to hide fees. Make sure they're trusted. And going hand in hand with that, make sure the rates are guaranteed. Make sure the profit margin that your processor puts you on, they're going to keep you on. And don't take the sales rep's word for it. Get it in writing. That's very important. One thing that's very popular in our industry is we call it rate creep, or most commonly known in the world as bait and switch. They'll offer you an introductory rate at 0.3%. Everything looks good. 3 months later, they put another 0.1%. A year later, they put another 0.2%. All of a sudden, your rate is twice as high a couple years down the road. So just make sure your rates are guaranteed. 24/7 live support. This goes without saying. Obviously, if you're a manufacturer, wholesaler, distributor, you're doing the majority of your business maybe 7 a.m. to 7 p.m. Monday through Friday. But just in case your system goes down or you need to pull a report and you're not sure where to grab that report, make sure there's somebody you can call to talk to. Lastly, dedicated teams. So if you're processing with one of the big ones I've already mentioned, you're probably calling an 800 number and talking to somebody in a call center. There's nothing wrong with that because they can read the notes on your account. But if you want to talk to somebody who knows your account, knows your business, what you sell, what ERP system or accounting system you're using, maybe you have a shopping cart integration and they already know what that is, that call is going to be handled much faster, and the satisfaction you're going to get from talking to somebody who knows your company is going to be much better than having to escalate through 3 or 4 people and not get a response till the next day. So just to be clear, our company, American Payment Solutions, we do offer everything you see on this screen. I'm sure a lot of your processors offer some of this or most of it, but depending on what you need, obviously, you need to make sure you're with the processor who offers what you need. So with that said, take the challenge. If we can't save you money, we're going to give you $500 for wasting your time. We've only had to cut a check a few times in the many years I've been here, so it's definitely worth your time to send us some merchant statements. So if you're processing on Sage or GP, SAP, QuickBooks, send us your 2 most recent merchant statements. We'll do an analysis just like you saw during this presentation, but it's going to be even in more detail. We're going to walk you through line by line, give you a demo if you'd like one, and also show you how much we can save you. So to send your merchant statements, here's some contact information on the screen. On the left, you have Patty Benitez. She is in charge of Sage and Acumatica. So if you're on those 2 platforms, send your merchant statements to her or give her a call or speak with your reseller of record, and they'll connect you with Patty. And Trisha Hardigan, she handles our QuickBooks, GP, Nav, and SAP, other ERPs that we integrate with. Speak with her or talk to your reseller, get in contact with Trisha. She'd be happy to take care of you. And that is all I have, Adrian.
Thank you, Bryce. That was an excellent presentation. You obviously know all the nuts and bolts. You're very knowledgeable, and we really appreciate you sharing that knowledge with us. We do have a few questions here, and I would like to launch a poll while we're announcing these questions. And it's just one question that if I could ask the audience to answer this. Are you interested in learning more? If you do answer yes to this, one of the 3 folks that you saw on the contact information sheet previously will be reaching out to you and see how they might be able to help on a more one-to-one basis. And we have an excellent question from Jerry. Jerry, thank you so much for this question. Does APS offer a partner or referral program? Bryce?
We do, yeah. In fact, we're extremely partner-centric. So the reason why all of you who are on this call have joined us is because you either saw it online or a partner or a message board reached out to you. We do not directly market, and we go through the partner channel. So if you're a Sage or Acumatica, Microsoft, QuickBooks reseller or partner, we'd be happy to talk to you. Trisha and Patty will line up a call with you, walk through a webinar talking about our partner portal, our partner program, and provide you the documents you need to partner with us. Thank you, Jerry.
And we have the same question from Bob and Martha. Yes, we are recording this presentation, and myself, you will be receiving an email from Adrian at ERPVAR. So that will contain the recording so that you can consult that in the future for more information. And it looks like here we are a Sage partner. Do you have a comparison on the fees compared to Sage Payment Services?
We do. In fact, Adrian, if you can let me know who that is after this call, I'll be happy to send that to, if they're a Sage reseller, I'll be happy to send that to them.
Perfect. Okay, and then I just wanted to remind the audience that there is a question mark button next to your name on the webinar pane. If you should have any questions, please click on that question. A dialog box will open up, and we can go ahead and announce your question for the audience. And Jackie, I see that you have your hand raised, and that tells me that you would like to speak to the audience. If you would not like to speak to the audience, go ahead and click on that hand, and that'll be removed. If you would like to speak to the audience, I'm going to go ahead and unmute your line so we can speak live. And Jackie, just wanted to give you the opportunity to ask your question personally if you did have one. You should be unmuted now, and I see that you're using, okay, there you go. You turned that off. Okay. So it doesn't look like we have a question from Jackie. Bryce, thank you so much for your presentation. That was very informative.
No, we're happy to provide the information. I appreciate the opportunity.
And I see the audience, we have 76% of you who have voted. If I can get 100%, that would be awesome. So if you can take a moment to just answer this question, are you interested in learning more? 76% going once. 81%, yay! Okay. And we do have somebody that is thanking you, Bryce, for sharing this information. We have 90% voted. And Terry, yes, we will get you the comparison that you're seeking as well. And Bryce, I would imagine, I see that there's a couple questions from QuickBooks Intuit Premier resellers. Would you have that same comparison for them that you do for Sage? Just curious.
Yes, we do. Yeah, if they want to reach out to Trisha Hardigan, we'd be happy to provide that to them as well.
Perfect. And I've got 100% voted. With that, everybody, we're going to close this presentation out. Thank you so much for your interest, and we will be back in touch. Oh, we do have one more question. Bryce just flowed in. Are there any fees for new installation, implementation, training, support?
That is a great question. So regardless of the integration that we provide, all the integrations we do, we have zero upfront cost. So we do the software is free, the module is free, integration, implementation, and training is at no cost. We literally make all of our money on the margin. So if it's an interchange plus account, which that's typically what we do, if it's at 0.2%, we're going to make 2.2%, and that's it. We don't charge for any implementation or training.
And one more question. How does a transition from another processor to APS happen, and what's the process?
Sure. So it depends on which accounting package that we're integrating into, but logistically on the actual merchant account side, when you sign our merchant agreement and we bring you over, typically that process can take anywhere from 1 to 5 business days, just depending on the sheer size of your account, what we're integrating into, and coordinating with your reseller of record or your QuickBooks Pro advisor to actually do the install. So that's the timeline that it takes. As far as canceling your old account, we will send you a welcome letter that has a pre-filled cancellation letter that all you have to do is call up your processor, ask them which line to fax it to or email it to, and they'll cancel out your account.
Perfect. With that said, I don't see any further questions. Thank you again, Bryce, and thank you, audience, for spending time with us. We really appreciate it. And if we don't see you again, happy holidays. Thank you. Take care.
Thanks, Adrian. Bye-bye.
All right, no problem. Bye-bye.